Hey everyone, today we're diving into Tesla, one of the most dynamic and volatile stocks out there. As of right now, Tesla is sitting around 259.40, but if you've been watching closely, you'll know it recently made a run up to 275 before pulling back. Today, I want to break down what this all means, where Tesla could be headed, and how we can approach this stock from both a trading and an investing perspective. So, first up, let's look at the chart. Tesla's been trending above some key moving averages lately, which is a positive sign. We have the 200-day moving average sitting down at 202, which is a big level for the long-term trend. Then we have the 50-day moving average around 233 and the 20-day EMA up at 241.46. Now, why does all this matter? Well, these moving averages act like checkpoints for the stock's momentum. If Tesla stays above these levels, it's generally a good sign that buyers are in control, at least for now. Tesla implied volatility, IV, is 51.4, which is in the 64% percentile rank. This means that 64% of the time the IV was lower in the last year than the current level. Why I bring this up is it's always good to check the implied volatility before jumping in. If you're unsure, consider signing up for our live trading room and email alert service each time we take an options trade, about 2 or 3 times each day in the link below. If we see Tesla hold above 241, and especially above 233, that could be a green light for it to make another attempt toward 275 or even 300 in the medium term. However, if we break below 233, that's when things start to look shaky. At that point, we might see Tesla head down toward the 200-day MA around 202, and if that level doesn't hold, well, that's where we could be in for a more significant pullback. But it's not just about the chart. Tesla's fundamentals are just as important here. Recently, Tesla reported earnings, and while the company is still a leader in the EV space, there were some concerns about revenue and margins. Tesla's trading at a pretty high valuation right now with a forward PE around 71, which means that investors are expecting big growth to justify that price tag. So while Tesla's been expanding with new factories in Austin and Berlin and the highly anticipated Cybertruck, any signs of slowing growth or margin pressure could impact the stock. And let's not forget about the increasing competition from other automakers jumping into the EV game. Now, on the flip side, Tesla is also pushing hard into AI and autonomous technology, with developments like the Optimus robot and their full self-driving tech. These are exciting projects that could add major revenue streams down the line, but they're still speculative. So while the potential is there, it's not a guarantee, and that's something investors need to weigh. All right, let's talk trading strategies. If you're looking for a short-term trade, pay close attention to that 263 level. If Tesla can break and hold above it, that could be a signal for another run toward 275. From there, we could see an attempt at 280, maybe even higher if momentum really picks up. But let's keep it real. This stock moves fast, so a stop loss around 241, just below the 20-day EMA, might be wise to manage risk on the downside. Now, if you're looking at a bit longer time frame, say a few months, then 233 is your level to watch. Staying above 233 keeps Tesla in a bullish structure, and a target around 300 isn't out of reach. On the flip side, if 233 breaks, that's where we might see Tesla retest that 200-day moving average at 202. If you're in for the longer haul, 202 could even be an accumulation zone, especially if you believe in Tesla's long-term potential. So, what's the bottom line? Tesla's at a pivotal point right now, with 275 acting as a ceiling in the short term, and 233 and 202 as our major supports. If we can stay above those levels, the bulls are in a good spot. But if we start breaking below, things could turn south pretty quickly. Fundamentally, Tesla's growth story is still strong, but it's facing more competition and pressure to keep up those high margins. For long-term investors, it's worth thinking about how much of that growth story you believe in, especially given the high valuation. All right, that's the Tesla breakdown for today. Whether you're trading or investing, keep an eye on those key levels and think about how Tesla's fundamental story fits into your strategy. Let's see where it goes from here, and as always, I'll be keeping you updated on any big moves. Thanks for watching, and let's see what Tesla has in store for us next.